Hi, this is Am here with the Bulletin Board Heroes here at Zacks Traders Cafe for Tuesday, the 12th of December. Starting off with the FTSE 100, which has actually broken through the 200-day moving average for the first time since the middle of October, that particular level around 75.70. And the big development, I suppose, over the last 48 hours is that the 50-day moving average is now rising at 74.70. We've also bounced above a rising 50-day line, which gives us a decent, normally a decent buy signal. Initial target here, that February resistance line there at 76.50. Above that, we're looking for a best-case scenario target at 7,800 by the end of this month, on the basis that that will be our year-end rally, only back below the 50-day line. 74.70 really delaying the upside scenario. And you can see in the RSI window, we've had a multi-tested uptrend line there, with the RSI at 61, so that does suggest that there's at least a move up towards 76.50 over the near term. Nice to see. It would be nice to see an end-of-day close back above that 200-day line, 75.70 today. Moving on to the DAX, where if we assume that the FTSE is actually going up, the DAX should be going up even faster. And we were looking for that resistance line projection, top of the May broadening triangles at 16,900. Just missed it today so far, but there's still a chance of hitting that. In fact, we've gone pretty near to that anyway. Next, above 16,900 on an end-of-day close basis would be up towards 17,800 by the end of next month. Upside valid, especially while we're above the old July-August peak at 16,500. 50 and 200-day lines both rising. That suggests that we're about a week or two away from a golden cross, and obviously the run-up to that has been a very strong rally indeed. Moving on to the Dow, and here breaking out of this beautiful, very beautiful tight bull flag there. The top of that flag there around 36,200, and above that we're looking for a new leg up towards that March resistance line projection, as high as 37,700 perhaps by the end of this month, but obviously we're allowing for by the end of next month. Let's see if the January effect kicks in. Upside valid while we're above 35,800, which was the old summer peak for this market. Moving along to Bitcoin, which has had a bit of a rug pull over the start of the week, or for the start of this week. We were looking for this market to remain within this rather steep rising trend channel from the end of September, beginning of October. The floor of that channel around 41,000. Above that, on an end-of-day close basis, we're looking for up to 50,000 by the end of next month. Otherwise, maybe we'll need to have a test of the old November resistance around 38,000, 39,000 as a worst-case scenario, and then we head higher. At this stage, early and end-of-day close back below the 50-day line, currently at 37,500, really delaying the upside scenario. Maybe we have to readjust that rising trend channel, but at the moment looks like it is still valid. Moving along to gold, where there was also a bit of a rug pull. Surprise, surprise. We've got the situation here where we're still just above the 2,000 level. Below that psychological level, I suppose, 2,000, 2020, we've got the 50 and 200-day moving averages around 1965, but hopefully at this stage, or we will not have to be testing that low for this market before a resumption of the break higher and a potential move up to 2180 by the end of next month. If you're cautious, I suppose you want to see this market on the right side of 2050, because that's been recent resistance on gold. Moving on to the stocks, and the cupboard relatively bare, but a few names which have done well over the recent past. This is AFC from what sort of bulletin board hero from start of the week. We've got the initial target there, 22 pence, and then we're looking for 28 pence by the end of next month. 50-day line starting to rise, and presumably when the 200-day line starts to rise later in the week, we'll have an acceleration on the recovery here, which has been a very impressive one. Upside value while we're above today's 18 pence low. Moving on to Acuity, which had a very good update today. Nice chunky contract, and V-shaped bull flag bouncing off the 50-day moving average. It's also a bear trap from below the May support there, around 5 pence. The more time we spend above 5 pence, the greater the chance of at least a move towards the old August peak there, around 7.6 pence, hopefully by the end of next month, or even sooner than that. Ideally, we're heading up towards that resistance line projection from January last year, which would lead us to 11 pence early in the new year. But the key here, as I said, staying above 5 pence if we can, and if we have to test down to the 50-day line again at 4.7 pence, so be it. RSI rebound at neutral 50, so that is also looking encouraging, as well as the V-shaped bull flag breakout that we have at the moment. On to the bears' favourite, Bidstack, which is having another go at giving them a slap. We've bounced off the 50-day line there and the floor of that rising trend channel from October, around 0.28 pence. Above that, we're looking for a retest of last month's brief spike and gap fill. The September gap fill as high as 0.6 pence, maybe by the end of next month. But ideally, we stay at or above that 50-day line at 0.28. Nice performance of late from Brighton Pier. And here you can see that the shares have hit our initial target there, around 48 pence, and end of day close above 48, and we could be going to a new target there as high as 66 pence by the end of next month. There is the 200-day line to negotiate at 49 pence, and we haven't been above that for quite some time, I think basically since August last year. So a bit of a decent turnaround here shaping up, especially if we can get that clearance of 48 pence on an end of day close basis. Moving along to another stock which has done us proud at the Bulletin Board Heroes, DG Innovate. Here we were looking for, I covered this on Sunday, we were looking for 0.08 pence, and we got that yesterday. We were then looking for up to 0.13 pence, and above 0.13, looking for a fresh target there as high as 0.19 pence after recent funding news, etc., etc. But it's a bear trap gap reversal through the 200-day line, one of the best setups that you can have. Moving on to a requested stock, which is ECOB Buildings, which has had a slow drift in the recent past within a falling trend channel. But it looks as though there may be a glimmer of a turnaround here. Low lows yesterday, but higher RSI trace. That suggests that we could get a break of the resistance line there from back in October, around the 15 pence level. Above that, looking for a best case scenario as high as 18 pence by the end of next month. On to gold and metal, where there's been a bit of director buying, CEO leading from the front, and it's bear trap gap reversal, so unfull gap to the upside yesterday, and the shares breaking the gap up day. That suggests that finally we're going to be out of this churn that we've been in since the company came to market. Top of the rising trend channel looks as though it's at 12p, and we're looking for that by the end of next month, or perhaps even sooner, given the latest director buying. If we're lucky, I suppose it could be 12 pence by the end of this month. Stock which never heard of, and therefore it's welcome here. Huddled Group, and here we've got basically a bear trap from October back below the 2.4 pence level. Also broken a line of resistance from back in June at 2.8 pence, above 2.8 pence. Looking for the top of that formation on the daily chart since December last year, as high as 4.5 pence by the end of next month. It'll be interesting to see whether we can get through that 200-day line at 3 pence on an end-of-day close basis during this week. One of the heroes of the autumn has been IMC, a massive rally from October. Fresh unfull gap to the upside today, so that suggests that while we're above 2.4 pence, we're going to have another go at testing or retesting the November resistance around 3.5 pence. And that could happen during the month of December. Best case scenario is up to 4.2 pence by the end of next month. Mkango is next, another charting victory. We've hit our initial target there at 13 pence very briefly today. An unfilled gap to the upside, rising 50-day line as well. Above 13 pence, we're looking for as high as that late 2022 resistance line projection at 18 pence by the end of next month. But it looks like a V-shaped bull flag breakout here with an unfilled gap to the upside. So plenty of positives there at the moment. One of the charting wins of the week from last week has been Powerhouse Energy, and here director buying has done the trick. We've broken through the 50-day line. We had an initial target of 0.4 pence by the end of the month. We managed to get it by the beginning of the week, and above 0.4 pence now, looking for up to 0.6 pence by the end of next month. And again, if we're lucky, it could be by the end of this month. The key here is that 0.6 pence area is the 200-day moving average. We haven't been above the 200-day line properly since back in the autumn of 2021. So quite a turnaround there. maybe the director buying is based on a decent hunch. On to the last two. First one is Trifast, and here I haven't looked at this stock for ages, if at all, actually. Here we've got a rising trend channel that's been in place since February. Top of the channel there at pound, which we are looking for by the end of next month, maybe a bit sooner than that. The reason for the inclusion today is the way that both the 50 and 200-day lines are rising, suggesting we're going into a golden cross later this month, and obviously the run-up to a golden cross, strongest part in the cycle, and therefore looking for the shares to at least retest that the top of that February gap down, a rather horrible gap down that we had then, and then head up to 100 pence. Upside value while we're above the 80 pence area, recent support. Finishing off with another rarity, which is Verici, and here we had a bear trap gap reversal, in fact a bear trap island reversal, gapping down then gapping up, found support above the top of the gap there around the 7 pence level. The longer we stay above 7, with a rising 50-day line, the greater the chance of a move to 20 pence by the end of next month. So punchy call there. Let's see if Verici can deliver the goods. That's it from me today. More updates tomorrow.